Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets before the bell, your home for actionable pre-market content. It is 6:42 a.m. on Tuesday, June 7th, as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin down 6%. It's been really volatile the last few days, up 6%, down 6%. Oil's flat, equities down about 0.5%. Nat gas up 0.6, but it was up 9% yesterday. Copper's down about 1%. Gold relatively flat, up 0.5%. Not much going on macro. We've got some international trade numbers coming out this morning, and we've got a 3-year bond auction at 1 p.m. today. Over on the earnings front, we're winding down. We've got Academy Sports and Cracker Barrel in the morning, and Casey's and Smartsheet this afternoon. So that's where we stand. I think where we're at right now is more of a psychological test than more than anything else. We have not done anything in a week except oscillate within a very narrow range, and that can be really frustrating. For example, yesterday we were up, real nicely in the morning, and they faded it the whole day. So from a psychological standpoint, if you're long, if you're optimistic, if you think we're in a rally that can proceed, then you've got some disappointment on your hands. So I think a lot of it is how you frame what's going on and then how you deal with it during this time period. I can see it can be a place of a lot of frustration because, if you're in options, time is money. So we've essentially gone a week and haven't gone anywhere. So chances are, whatever option positions you have, whether you're a bull or a bear, you're losing value. So would certainly like to see price move, just from the standpoint is we'd get resolution. So I think we're just going to have to be really, really patient until something happens, and something always does. So the more time goes along, the closer we are to a resolution of whether this rolls over, in which case you'll look back and say, oh, that was just a little baby bounce, that could have never been real. And if we break out here and come up and fill some of these upper gaps, then we'll say, wow, that was a good bounce. Glad we were long. So that's how it goes. In hindsight, everybody will say that they had it the whole time, that they knew this was just a fake rally if it rolls over. And then the other side will say, well, they knew this was just a bull flag, and then prices accelerated after that. So let's take a look at it. Not anything real monumental, so maybe I can get through this tape in under 40 minutes. I always seem to find it hard to do that. So we started out high, and then, they faded it the whole day. Nothing has happened on the daily chart. You can see that we are in this chop zone here between 410 and 415, with the 50-day capping any moves higher, and the 8 and 20-day acting as support on the downside. And I think those are going to be the key levels as we go forward. If price were to lose the 8 and 20-day as support, if we roll down here to 405, does that mean it's going all the way down? No, but I think you'd have to really reevaluate any longs that you had at that point, because then you're kind of on the wrong side of the chart in terms of being back below all the moving averages. And whenever you've got price below all the moving averages, I mean, it's by definition a bearish setup. So let's look at the 60-minute chart. You can see here we opened up high. We got into the middle of this gap from that was created Friday morning. We got slammed down to support on Friday, and then yesterday we had the big gap up. We didn't quite close this gap, but then we certainly came down and closed the opening gap and came right back down to support at 410. So we're in this choppy range today. I think you can be long. Well, we may open below 410. We're down, you know, 0.5%. So we're like down in here. We've got the top of this lower gap that has not been filled yet at 407.70. That would be a place for a potential bounce if we opened low and they took it lower, or a fill of this gap down to 405, where there would be the potential for a bounce. And like I said, you drop below 405, then you gotta be looking to the downside, I would think, at that point, because that would be your last place to get a good bounce at 405, having that technical check mark of getting that lower gap filled and seeing back in the chart support, resistance, support, or resistance, support, support. So that 405 is certainly a big line on the chart. If the bulls are going to hold it together, they got to hold the line at 405. At least the way I see it. Same thing on the Qs, but at a lower level. I think this is this zone here between 317 and 322 is the comparable level that we just looked at on SPY, and we're a little shy of that. But by the same token, we are in between the 8 and 20 as support here at 305, and we have not really come up to touch the declining 50, which has now come in right at this 317.35 area. So really, in order to make any kind of substantial progress, we've got to hold the line here at 305. I think your fail-safe number on the downside is this 298.300 area, where we've got this open gap that is yet to fill. If we were to come down here, potentially bounce off the top of the gap, fill it, bounce, you can't really drop below 298 without really thinking about the downside at that point. On the upside, we got 310, which is capped most of the advances, and then we've got a gap yet to fill, and then we've got this 317, which will be a big test. Here's the exploded view. You can see that this 306 has been a big line of support on the QQQ hourly chart, and if there were to be a break of this line, then your next level of support is going to be down here at 302.42, and then you've got a gap down to, I've got it marked as 299. Yeah, I think it's drawn a little bit incorrectly. You can see the bottom of this candle would have been where the gap started. I think the bottom of the gap is actually 299. I've got it drawn closer to 300, so I will adjust that. But that's your, I think this 298 is your last stop if you're holding on to a bull thesis, because you got support. You got all these lines of support here. You got a large volume over price bar. You've got a lot of touches right in here, and you got a lot of touches right in here. So you lose 298. I'd have to assume that it, the rally has concluded. Now, if we hold that on the upside, we gotta drive up, close this gap, and then head towards 317. So it remains to be seen whether we can do that. But I think the point that I want to make is, while this past week has certainly been frustrating, PPO is still positive, although momentum's coming out. A positive outcome would be getting a bull cross at the 0 line on PPO. That would be hugely positive. And we haven't dropped below 50 on the RSI. So as weak as we may think the price action has been, it's more or less been consolidating within a range after a pretty nice, sharp, nice move higher. And so if this were to turn higher and RSI can hold that 50 line, the bulls would still be in good shape. IWM didn't have a lot of movement. We're right here at the 50, probably closed just below it. The 50 comes in at 188.36, and we closed at 187.87. So, I mean, we're 50 cents below the 50. A positive move would be to obviously take out the 50, close above it, and then have 50 be support there, right above this 187.50. And you can see on IWM, it's been relatively stronger. Why? Because whereas SPY and QQQ have been oscillating in a range, actually IWM has been putting in a series of higher lows. We had a low here, we had a low here, and we had a low here. So we have a series of higher lows, and we're pressing against the highs here at 189. So if we can pop that, then we've got a chance to come up to 190 and even potentially fill this gap all the way up to 194-ish. Moving on to FATMAAN. Facebook had this really big bar in the afternoon. I did not see any news or anything like that. I know there was a pop in the broader markets, and they ended up not really fading too much out of that bar. I think right here in the middle is if you're not in, I mean, if you bought support, you're in good shape because you got that, I think it was almost a $7-8 move. We still got the gap that needs to be filled. So I think your first entry today is either on a pullback to 190, 191 that holds, or a move into this gap and hopefully then get the gap fill and the breakout that would open the door up to 204 on Facebook. Also note here, PPO, positive bullish regime, and you're starting to get a bull cross right here on PPO at the 0 line, and that keeps the chart bullish on the indicators. And same thing here on RSI, hovering right at the 50 line. So Facebook at least from an indicator position, and price is, has an opportunity to go higher here. And we'll just have to see, if it opens lower, if it can hold 191, 190, and then re-ramp higher. Apple, gap up yesterday, and then they faded it the whole day. Back down here to the top of this gap at 145. You can see that that is held for a couple of days. I think you can be long against that level with targets above, basically at the gap at 148. You can see yesterday on that move higher, it got stopped right at the gap. So you can tell that there is muscle memory there at the edges of the gap, and you can use that to your advantage. And if you were Johnny on the spot and you saw that you were at the edge of the gap yesterday and price was not making progress, that was certainly an objective short against the gap. And if you did that, you got a nice $3 move. So that ain't all bad. And if you did that trade, then kudos to you. Okay, we had the this is Tesla, excuse me. Gap higher up to 735. That was a line we had on the chart, and then they faded it most of the day. Did not come all the way down to 700 where it touched the other day. I think your pivot points for today are at 700 and 720. If you get a break above 720, I think you can be long, looking for 735 and then the bottom of the gap at 745. And then, of course, if you get a move into the gap, then you got much higher targets up towards 775. Microsoft, disappointing. I mean, what can you say? It came right up here to this 274 and was rejected right back down to support at 269. What was the low? Actually, the low was 267. You can see it here. Made a little rally towards the close. So I think it's got to recapture 269 and then make a move towards 274. But you can see that 274 has been a problem. Rejected, 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 rejected. This was a fake move. Gap up, immediately rejected down into this range. So for all intents and purposes, you've got a trading range between 269 and 274 that you can trade around. And, that's a $5 range. If you are sharp and want to trade that range, you can certainly do that on a break back above 269, 270. You can be long against that and see if you get a move up to 274. But the big move higher, in my opinion, would be on a breakout above 274 that sticks. Amazon is where we had the big split yesterday. We had gapped up like most of the other charts. Then they put the fade on, but they didn't take it all back. I have not marked exact levels on this gap, but it essentially runs from 124 down to 122.50-ish. So today, I think price has to hold the top of the gap. If it doesn't, then you've got another level just below, and then you've got a bigger level of support down at 120. I did not look at the volume, but I'm sure the option volume went through the roof now that it's not $1,500 or $2,000 to get a single option. You're going to be able to get those a lot cheaper, and I'm sure that's brought a lot of people into the name. And, that was the whole goal of the split, to reinvigorate retail, and I'm sure it has done that. So you got some pretty clear levels, 126, and a breakout above 128 would open the door to the bottom of this much bigger gap here on the chart if things can get going. Same kind of look for Google. I mean, relatively stronger than the rest of the market, was still up 2%. Gap up to this level we had on the chart, 23.75. Then they faded it. We've got an open gap down here between 22.90 and 23.23. So today we want to hold the top of that gap and drive higher. If not, probably going to fill it. And then your big line in the sand is 22.75. If you lose that, then I think you can come back down here to this 22.25, top of this old gap. And remember, we've got the open gap here in the middle between 21.56 and 21.83. Netflix not really doing anything, down 1%. I really think your levels here are 201 and 195. I think it's going to be hard to trade, a $5 range in Netflix. I think you're looking for either a breakout of 201 or a breakdown below 195. And I would use those as your pivot points today if you're trading in Netflix. Semis, same story. Gap up right to 247 where it was rejected, slammed back down to support, came down to this 240-ish area that has served as good support. Look at all the touches along that line. I think you can stay long against 240. I tried a long trade yesterday. I did not get it at 240. I bought the breakout on the recapture of 242.50, and it worked for about 15 minutes, and then they rolled it back over, so I was stopped out. That stunk, but I mean, that's trading. The idea of buying a reclaim of a well-marked level. I was obviously hoping for a run back up towards 247. Didn't happen. Of course, I would have had a much better cushion had I got it at 240. That way, on this thing getting slammed back, I wouldn't have lost any money. I would have stopped out or given up on the trade. But the better your entry, the more margin of error that you obviously have if the trade doesn't work out. Moving on to ARK. Pretty interesting here. You've got a series of higher lows, right, off of this low, and working towards a ascending triangle. If we highlight this area here at 1925, that's where you're looking for a breakout. And I would not want to see price drop below 1850 because that would open the door down to 1750. So I think it's got to hold this line, and I think you can be long against 1850 on ARK F. ARK G, middle of the range, several fake breakouts. I don't think there's much to do on this particular chart until you get to 31 or 32.75. I think you should have those alarmed in your platform if you plan on, or if you're interested in ARK G. I think here in the middle you're just going to have a bunch of chop. ARK K, coalescing down around 43.50. I think that's your pivot point. Below that opens the door to 41. Above that keeps the door open for filling this gap up towards 45.75 and taking out these highs, and that would open up the door to 47. But I mean, PPO still looks relatively productive. I mean, momentum's been coming out, but we're still above the 0 line, and RSI still hovering at the 50 line. So this, I mean, really, on a lot of these charts, I mean, it's anybody's ball game at this point. So pick a side, basically. Or more well said would be wait for your signal, not pick a side, because pick the side where you get the signal, not where you think or want it to go. We had originally drawn in this bull flag. Well, that's been invalidated. What you want to see on a bull flag is, you know, your move up, your consolidation, and your breakout. That's all fine. That's textbook bull flag action. But then when it came back down to support, that kind of invalidated this pretty setup here. So now we're just in a consolidation range between 156 and 159.50, and we're right here in the middle. So I would have alarmed 56. You probably don't want to see price drop down below that. Otherwise, it brings 54 into play. As long as it can hold that area, you've got an opportunity for higher. We did have some good news yesterday on Valero. The refiners remain strong. Energy kind of wobbled yesterday. Oil didn't do anything. All the action was in nat gas, and I think what's going on in nat gas is Europe and maybe to some extent the Americas here, they're trying to desperately restock their nat gas inventories in the summer to get ready for winter, you know, because of the Ukraine and Russian situation. And so you see these cycles on nat gas where, you know, like yesterday, up 9%, right? I think what they're doing is, and then we saw that like a week or two ago where it was up 9%, and then that was faded, and now we got another up 9%, and I think they're cycling through the ships, and then when those ships are ready to be filled, there's not a lot of negotiation. It's just buy whatever you can get your hands on. And so I'm wondering if those are the cycles of buying to refill those inventories in Europe, and then once those ships are filled and on the way, then price falls back. So if you are or want to be a nat gas trader, you know, if you can obviously catch those cycles, then I mean, that's a gravy train. If you can catch a 9% up day, that'll pay a lot of bills. Not the easiest thing to do. I mean, they call it the widowmaker for a reason. So be careful with it. Don't get out over your skis, because if it goes the other way, then of course the losses will pile up just as fast. But I think there is a going to be a constant bid under oil and natural gas right on through the summer. So I'm bullish both of those two, but with some volatility to go with it. And what you may want to do is just play natural gas through the equities. You can, Southwestern Gas, EQT, I think FCG is a natural gas ETF that has a whole basket of names. So there are different ways to play natural gas other than, the futures market that will be a lot less volatile and maybe something that suits your risk tolerance and your nerves a little bit better. So anyways, let's see what today brings. Maybe more oscillation. Maybe we get a move higher or lower out of the range where we can, do some more, get on the right side of a trend that lasts more than a couple of hours. That would be really, really nice. So anyways, let's wrap it up there. If you're new to the channel, please hit the subscribe button, the alarm bell, the notification bell. Jump over in the show notes. You'll find a place to drop in your email. That way you'll get my content morning, noon, or night on observations in the market, trade ideas, stuff like that. And if you've been doing well, you'll also find a place in the show notes to buy me a coffee. Help me keep the lights on over here as a small gesture of support for the work and the channel. I would certainly appreciate that. And for those of you that have done that and are continuing to do that, I have certainly noticed and appreciate that deeply. So also as a side benefit, you'll get, once you register, you'll get an invite to our trading room where you'll get a lot of camaraderie with other traders, and you'll also get a lot of trade ideas. This is a tough business to go at all by yourself, and I think having a community can be very, very helpful at times. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.